So it's early 2026, and if you're following the prime property market, the headlines are a bit confusing.
They really are.
You see things like room for growth, but then the actual data feels more like things are just bottoming out.
It's a classic split-screen reality. Today we're doing a deep dive into the latest forecast from Savills research, which was published by Property Industry Eye.
And the goal here is to figure out why the UK market seems to have broken into two completely different stories. Prime central London and then everywhere else.
Exactly. And the main theme for 2026 isn't a boom. Not by a long shot.
It's more of stabilization year, right?
Stabilization is a good word for it. I mean, we're not seeing a rocket ship. It's more like the landing gears coming down. But that landing looks very, very different depending on your postcode.
Okay, so let's start right in the center. Prime central London, or PCL. The forecast there is another drop, isn't it?
Yes, a further decline of -2% for 2026.
Which doesn't sound like a huge number on its own, but you have to zoom out.
You absolutely do. Context is everything. By the end of 2025, values in PCL were already, almost 25% below their 2014 peak?
24.5%. That's a staggering number.
It is.
I mean, if you bought a top-end property in Mayfair a decade ago, you're not just stagnant, you are significantly down.
And the reason for this continued dip in 2026 isn't just about economics, it's regulatory.
The November budget.
Right. The market felt it was better than feared, but the details are what's putting the brakes on. You've got this new high-value council tax surcharge, plus the end of the non-dom regime is now confirmed.
And that's the real sticking point, isn't it? The non-doms are thinking twice.
They are. Global wealth is actually growing, but these key international buyers are looking at London's new tax setup and, they're hesitating.
It just shrinks that top-end buyer pool.
It does. They aren't necessarily fleeing, but they're definitely not rushing to buy more.
So what about outer London? Usually you'd see a sort of halo effect with wealth spilling over.
Well, the forecast there is completely flat, 0% growth.
So the halo is broken.
It is, because the center isn't generating any heat. People normally cash out of the center to buy bigger in, say, Richmond. But if you can't sell well in Mayfair, you don't buy in Richmond.
And outer London is more reliant on mortgages.
Much more. And while rates are falling a bit, it's not enough to ignite the market on its own.
But, and this is the big pivot, if you leave the M25, the story completely flips.
This is where the domestic market just completely decouples from the international one. Prime regional markets are set to recover fastest. We're looking at growth of plus 1.5% in 2026.
What's driving that?
It's really falling mortgage costs and just better sentiment. It feels like the regions have properly hit the floor and are now starting to climb back up.
And the stand-up performer is the one I don't think anyone would have guessed.
Scotland.
Scotland. It's expected to be the top performer over the next 5 years.
It is the outlier.
Which feels totally counterintuitive. Didn't they just announce some fairly major council tax hikes?
They did, and that's the irony. The January budget in Scotland brought in new council tax bans for homes over £1 million.
Which should kill a market.
It should. But the key detail is the 2-year lead-in time.
Ah, so it creates a deadline, a kind of buy now or pay more later window.
That's it, exactly. It gives what they call breathing space. It's actually encouraging people to buy now before the changes kick in. It's fascinating psychology.
So you punish the market in the future to stimulate it today, and you have other places like the Midlands, the North, and Wales also doing well, mainly on affordability.
That's right, but Scotland is winning on that clever policy timing. It creates a unique little window.
So let's look a bit further out then. The 5-year outlook to 2030, the split gets even wider.
It gets huge. By 2030, prime central London is forecast to grow by about 8.1% in total.
Okay. And the regions?
Prime regional markets are looking at 17.6%.
Wow. That's more than double the growth outside the capital.
It just hammers home the story. Global wealth is massive, but it's hypersensitive to regulation, and right now, it's a bit reluctant to dive into London. Meanwhile, domestic buyers in the regions just want a nice place to live with a mortgage they can afford.
So, to sum up 2026, we're at the bottom of the curve. If you're in London, expect things to drift sideways. If you're in the regions, especially Scotland, the recovery is probably already underway.
That's a perfect summary.
But that leaves us with a final thought to chew on. If global wealth keeps finding London too tricky because of regulation, and the regional markets are ultimately capped by domestic wages and mortgage costs, who exactly is the prime buyer of 2030 going to be?
Now, that is the multi-million-pound question.
Thanks for listening to this deep dive. We'll catch you on the next one.